So the most important to take into consideration, long term, we do not scope realizations in short term. I mean, short term, I mean a week, I mean a month. That what we account for is realizations long term. So long term, I mean 6 months, a quarter, a year. Long-term trading scopes 3 immediate needs in order for you to be successful. The first is the risk ratio reward that is linked to a strike rate. So what is this? Let's say that you normally use a dynamic risk ratio reward. Today you do a trade, you do 1.5. Tomorrow you do a 1 to 3, then you lose 4%. No consistency whatsoever there. This is not sustainable long term. For you to be sustainable long term, you need to have the math behind your strategy to support your plan on going forward. So for that, what we do is a bit of planning, and this is the essential basic part that any trading system needs to be successful long term. So what we're going to do is actually assess that right now. Let's put it on a simple way. You got a great way of trading in your strategy scopes a 1 to 2 normally, and you have a 50% win rate with a 1 to 2. So what we do is calculate, for example, a 1 to 10. Let's go for ICT 1 to 10. We're going to hit the 1 to 10. It's going to be amazing. It's perfect. The break even is 9%, meaning that you just need a bit more than 9% to be profitable with a 1 to 10 strike rate. How does this come to the trading frequency? For you to find a 1 to 10 trade, you'll be looking into weekly, monthly charts maybe. You got probably a trade or 2 trades maximum per month. I'll leave you with that. Let's drop to 1 to 3. 1 to 3 scopes that your break even at 25% win rate. So if you have a 50% win rate at a 1 to 3 risk ratio reward, it's pretty decent stuff. Now, what I mean with that is one to 3 risk reward. So the profit is 3 times, you see, 3 times the stop loss. So if you win once, you're forced to lose 3 times and you're still break even. And this is very important down the road. Let's do a bit more exercise. So when you have this trilogy in place, you scope that you have a proficient trading setup for a long-term possibility of return. So risk ratio reward 1 to 3, you have to at least have 25% to break even. So let's say that your strategy has 50%, or let's put it fair, let's put it at 40% win times with a 1 to 3 risk ratio reward, right? 1 to 3. Today was not good, tomorrow is not good. So equity curve, 50%, 40%, we do a 1 to 3 out of 100 trades. How does this turn out to be? And the results. There we go. So let's put it on a challenge account, 100,000. So average loss is 1,000, so 1%. With 6 maximum consecutive losses, 6,006% loss. And you are actually able to scale the account with 99 trades to twice as much. 1 time fold, 1.5 time fold. So this is important long term, because if you just change the win rate to, for example, 26% on a 1 to 3, it barely is profitable. It's still profitable, but it doesn't get you that apex loop, does it? So this is not what we want. Long term. Long term, we want a strategy that gives us, let's put a 50% win rate. And you see how the actual apex curve changes over time. And this is very important. Of course, I don't intend to make you an adept of a 1 to 3. Man, you can do a 1 to 2. Let's scope a 1 to 2. What is the 1 to 2 minimum break even? 33%. You have to have a bit more than 33% to do a consistent 1 to 2. And you will scope these two factors of the trilogy method. So risk reward, checked, 1 to 2. Win strike rate above 33%. Check. Is this checked? Perfect. Trading frequency. Now, according to your strategy, you're going to see where are you going to place the trades, on which time frame you're going to place the trades. Does a lower time frame give you more win rate or less win rate? And because of that slight change in time frame, you can adjust the break-even win ratio, maintaining the same risk ratio reward, making you long-term consistent. Very important. So 1 to 2. Oh, but a 1 to 2, I don't blah blah. Okay, 1 to 2, 50%. 1 to 2, 100 trades, 100,000. Boom. There. 1 to 2. No? Oh, but 40% 1 to 2, not the best. But at 60% 1 to 2. Very good. Now, what happens if we fall down 20% of 1 to 2, below the 33% of break even? This is what happens. So, not good. Let's put 1 to 45, not even 50% on a 1 to 2, over 1,000 trades. Do I need to show you more? There's 11 consecutive losses. It's pretty down in your face. Do you have any question? This is sustainable maths. When you come with logic and assumptions, it will not work. You need to be consistent in the results that you're targeting long term. And for that, we use math calculation to achieve the triology effect methodology, to understand what is my best scope based on my strategy, what will be my maximum value that I'll be able to output with a decent RR. Oh, but I can only do 1 to 1, 1.5. All right, 1.5. You need at least 40%, above 40% to be profitable. And this is why. Is it possible? Yeah, man, it's amazing. 1.5. So that's it. That's it. 1.5. 1.5. So this is, let's put the same example so you guys see. What am I doing wrong here? So 1 to 2. One to 3. Let's go for the 1.1 that you guys have really problems with. So we need a bigger strike rate. We need an increased win rate. So for that, we need, let's say, 50 to 60%. Equity curve, 50%, 100,000, 1.5, from 100,000 to 150,000 consistently, with 5 consecutive losses in the mix. Is it possible? Yes, you need to be consistent to these rules using trilogy method. If you today do 1.5, tomorrow 3%, and then you lose 4%, and then tomorrow you're doing a 10R, and then you're losing 20R, I'll tell you right now, stop trading. Stop trading. Focus on a plan that consistently gives you a risk ratio reward that you want based on your strike rate with your strategy, and do the calculations yourself. This is a free website. You can come here, resources, calculate your strike rate for the given risk reward ratio that you want to use. It doesn't mean that, oh man, I am only proficient at, I don't know. No, man. 1 to 1, 1 to 2, 1 to 3. Choose one that works for you with your strategy, but focus on the trilogy. So risk ratio with win rate, strike rate, with trading frequency. Only trade once per day. You decrease maximum drawdowns. You don't jeopardize the risk on that account. Tomorrow there's a daily reset. This is on prop firms. Tomorrow there's a daily reset. You have another 5% or whatever. Consistently across a time span. 1.1%, 1.5%, 1,000 trades. Win rate, it was 44%, if I'm not mistaken, right? So let's put 50%. Very close, but still very profitable. 1.1, 1.5 are then the risk that you use per each RR is that what you define based on the existing considerations on the existing prop firm that you're using. For example, you can start with 1%. 1% out of risk multiplied by 1.5. All right, there you go. You risk 1,000 to get 1,500. So risk 1,000 multiplied by 2%. You get risk 1,000 to get 2,000. Risk 1,000 multiplied by an R of 3. You bet. And risk 1% to get 3%, which is 3,000 on a 10,000 account. Very nice. Oh, but I want to use 0.5% risk. Cool. How much is 0.5% risk on a 100,000 account? So 100,000 multiplied by 0.5% is equal to $500. Multiplied by 1.5, and that's the 1.5 RR on a 0.5% risk. You risk 500 to get 750. When you lose one position here, it will step you back faster than if you have a 1 to 3, because on a 1 to 3, you still have the same 500 multiplied by 3, meaning when you lose one, you're just losing 500, meaning that you have 3 times to actually lose, to actually break even on these losing streaks. So it gives you a much higher possibility and consistency profit factor compared to a 1 to 1.5. So that plays a role too. So what will be the best for me? For me, I like to use 1 to 3. Today, I did FTMO, I did 3%. Alpha Capital Account 1 did 3%. Alpha Capital Account 2, I did another 3%. I did a total of 9% across 3 prop firms, 2 prop firms, 3 accounts. And yeah, my strike rate is 90% on a 1 to 3 ish, which is like that. If you have doubts, that's my dashboard. Why does this work long term? Notice that this is 2024, the 1st of January, the 28th, until now, 100,000 account, there's 409% done. How many trades? 160 trades. In sum, I did 3% out of 2 trades. I did 1 trade 3.9%, 1 trade 3%, 3%, 2 trades 4%, 4 trades minus 0.12, 1.69, 10%, 12%, 5%, 7%. And of course, this varies, but the average is that, right? And how do you come to these results? When you have trilogy linked together. And this is done by you attaining what you actually have as a risk ratio, win strike rate, and the trading frequency. I trade once per day per account. That's it. Tomorrow, I trade more. I trade personal account, prop firm accounts. Personal account, I use a different risk setting than my prop firm's accounts. And that's the idea, right? So this is how you can actually understand and scope what will be your strike rate that you require to achieve long-term consistency and profitability across prop firms and personal account. Break even 1 to 2, you're good at that, you like it. Strategy, you like to enter an FVG to well, give it a 50% win rate. You have a tiny buffer here of 15%, more or less. 60% win rate with your strategy. Use a 1 to 2, 1 to 3. Perfect. There you go. I hope we kind of clarifies a bit what is actually needed initially to understand and on how to actually attain a long-term consistency and profitability. It is just this. As for the how the actual market works, let's do it like this. So tails, I win. Heads, I lose. Let's do a 1 to 3 strategy with something that I have here. So for this example, what we're going to do is clean all of this. And I'm going to show you guys how this relates to a prop firm challenge. So let's flip. So tails, it's a 50-50 strategy because I can win 50% of the time. I have no idea what's going to come out, right? I'm blind to the market. I don't have any edge. So I'll flip it today and I go with the tails. I lost 1%. So 1%? No. Okay. So in here today is the 5th of March 2025. Session was London. I lost 1 hour. Total loss 1 hour, 1,000. So trade 2. We're doing a 1 to 3. Heads, I won. So we're going to do the same thing. We're going to do, we won, we win, 3R. All right, so this is actually, yes, 6 and the 5th. So, right. Second day. Second day, we got total 3R, P&L, 2000. Prop firm challenge, we need to reach 8%, 10%, right? Let's flip again, next day. Heads, shit, another one. Another win. So bang, there we go, 3%, blah, 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 day 7. I don't know if this is right, but the purpose is that we got 5,000 in the bank. We flip it again, the next day, not on the same day, the next day. And we win again. So there you go. So if we have a target profit that is gonna, and this is 50% chance. If we have a target profit of 8% on a hedge fund on a prop firm, look, there you go. There's your 8%. We lost 1%. We did 9%. Total is 8%. How many days? 1, 2, 3, 4. 4 days. Let's do it all again. Let's flip it again. Tails. We lost. Still there already, right? Let's flip it again. Heads. So we win this one. So 3, 6, and March. We flip it again. Next day. Tails. We lost. Right? So we have a win here, there, and we're still in positive. We have 2 losses, 1 win, but we're still in profit. Right, let's flip it again. We won again. So we got 4% covered. We won again. Right? 7%. Let's flip it again. We lost. Are we worried? No. Why? Because we already know the math sequence long term that this will generate. Your profit, if you're consistent with this. So why are you stressing? Why are you nervous when setting a trade? It's a flip coin, or it goes well or it doesn't go well. Based on your strategy, maybe you have a bit more proficiency than 50%. Maybe it gives you 60 to 70% accuracy. It's perfect. Don't change it. Stick to it. Maintain consistency long term. That's it. So, tails, we lost again. There we go. Are we still in the prop firm? Yes. Did we breach any rules? No, we did. Lose 1% per day. We are currently at 6% net. We lost a total of 3%. A total of 3R. We made a total of 9R. And this shows a lot of consistency on the prop firm side. So let's the next day. We won. And what happens now? Day 1, 2, 3, 4, 5, 6, 7. 7 days, 1 week. Same strategy, exact RR, scoping what? Scoping exactly trading frequency, win ratio with the given RR. Random at 50-50% on a coin randomizer. Tails or heads, 50% choice, like the market. Direction, up or down. 7 trades, we got 9% done. The chances that this goes back on you is the risk of ruin calculation. So you will have to have a series of bad trades. And with a 50% win ratio on a 1 to 3, it's always good. Now let's scope a 1 to 2. 1 to 2. So, same logic. Tails, we lost 1 hour. Next day. Heads, we won. So we need to pick this up, and there we go. 1 to 2, right? 5, and to the 6th of March, right here. And in here is a win. So we got a 1 to 2. What is our 1 to 2? We need 33%. All right, let's flip it again. Heads, we won again. So where are we now? 3%. Cool. Next day. Heads, we won again. Where are we? 5%. Flip it again. Heads, we won again. 7, 8, and with the 1 to 2, it takes a bit more time to reach the actual outcome result. But little by little, flip it again next day. Another win. There we go. And here we are with 9% generated, 1 loss. This is really decent, actually, strike rate. So there we go. We got a 90% strike rate. No comments. Did we do it as well? Yeah, we did it as well. Let's say that this is failed, and what we need to do now is actually regenerate it. So let's do it again, just to prove a point. Heads. So we won this one. So we take this one from here and we put it there. All right. Flip it again. Another heads. We won again. It's rigged, that shit. Next. Tails. Finally, something to account for a loss. So, loss. All right, let's do it again. Heads. We win. Next. Heads. We flip it again. Tails. We lose. 6%. We flip it again. Heads. We win. 8%. Challenge it. Profit target percent. Pass. Let's go for the 10%. Heads. Let's do it with a 1.5. Let's clean all this stuff. Let's do it. So we lost this one. We lost 1%. Flip it. We won. Flip it. Another day. another loss. We flip it, another day, we lost it again. We flip it, we won. We flip it, we won again. We flip it, we won again. We flip it, we won again. We flip it again. Another day. Another win, because our strategy is that amazing thing. So, and we win again. And we lost. We won. We reached 8%. Another day. We reached 11%. Important to denote that this shows that the total trades that were conducted were 14 trades. The total trades that were won were 10. We lost 4, 71% win rate on a 1 to 5 RR, 28% loss. 14 trades, challenge is done on a 1 to 5 RR. Well, I can give you this Excel calculation. It's attached in the link on the description if you want, when you think it's a value added. So you can organize your trades and you speculate and FX replay it or backtest it yourself to see where this leads you. Leave the links as well to the strike rate calculator and the equity curve calculator. So you can, so with this strategy at 1.5 over 100 trades, where would this lead us? And how about 1,000 trades? Consistently, day after day after day. Get a hobby, take photography, swimming, gym, do a trade a day, leave the charts, leave all aside, and do your exercises, do your music, pick up a guitar, grind on the riffs, on the, do something constructive aside other than trading. Trading is like this. If you get out of this and start inventing and imposing on your strategy or your initial plan, you're going to break it. And then you're going to say that your strategy doesn't work. You're going to hop from the existing strategy to a new strategy. This is a big mistake because you're going to enter the death loop cycle of, oh, I lost a few trades. I'm going to enter a new strategy, which breaks the whole cycle of what we're currently trying to understand long term. And people loop on, oh, this strategy doesn't work. This strategy doesn't work, instead of actually giving a bit of time, enhancing the strategy based on the existing factors that I just showed you guys here. Give it a try. Let me know.